Hello and welcome to the channel. I appreciate you stopping by for a visit today. Today we will look at my portfolio holdings that are reporting Q2 earnings for week 30, covering July 21st through July 25th of 2025. RTX reports on Tuesday, July 22nd before the market open. AT&T reports on Wednesday, July 23rd before the bell, while Alphabet reports after the bell. CNC wraps up the week reporting on Friday, July 25th before the market open. For each of these companies, we'll examine the revenue and earnings estimates and the options market implied move. We'll review the current price charts, looking at relative strength and momentum indicators. Let's get started. Let's take a quick look at the earnings worksheet to see if anything surprising happened for the companies that reported earlier. Citigroup, Johnson & Johnson, and U.S. Bank all reported last week. For those three companies, revenue in lines or beats were 67%, while all of them beat on earnings per share. The initial response for J&J was a move of 6.19% with an implied move of 3.1%. So the market was pretty pleased with Johnson & Johnson Q2 earnings. In total, the earnings per share expected was $5.35 for these three companies, and the actual earnings was $5.84 per share, so that was a beat of 9.2%. Before we look at the charts for the individual companies, I would like to spend just a couple of minutes looking at the market to see what environment we're operating in. I have this resistance line here set at the February 19th high, which is actually serving as support for the market at the moment. Over the past week, we had 3 up days and 2 down days in the S&P 500. We hit a record high on Thursday with a slight pullback on Friday. For the volume, we're trading right at the 50-day moving average for volume. The RSI has moved out of overbought condition. We're still very near that position of 70, currently trading at 69.02. And we can see that we're still trading in positive momentum. The short-term average has dropped below the longer-term average, but I think we're still in good position with the momentum. If we look at the S&P 500 on a 5-year weekly view, we are trading in positive territory for the longer-term averages, the medium-term averages, and the short-term averages. So across all 3 time frames, we do have positive momentum on the SPX, or the S&P 500. Then finally, let's look at volatility. Let's look at 1 year. We can see that on April 7th, we hit the peak in the VIX with the tariff announcements. Since that time, we've been trending lower. Currently, the VIX is sitting at 16.41, indicating moderate volatility. We have been as low as 12.77 in December. So volatility is a little higher than at the end of last year, but still in pretty good position at this moment. In the previous quarter, RTX reported revenue of $20.31 billion beating revenue estimates by $509.48 million. RTX reported earnings of $1.47 per share, beating estimates by 10 cents per share. For this quarter, the revenue estimate is $20.65 billion, with earnings of $1.43 per share. Over the last 90 days, 2 analysts raised estimates and 15 analysts lowered estimates. RTX meets or beats analysts 1 year forward estimates 91% of the time. RTX is showing positive relative strength going into the earnings. The options market is pricing an implied move of plus or minus 4.9%. This is the 1 year daily price chart for RTX. One of the first things that we'll notice is after the tariff announcements in early April, like most other companies, had a pretty significant price drop. We did see a nice recovery of RTX following the announcements. And then after the earnings on April the 12th, we had a pretty significant drop down to about 112 on that day from 128 or so. But the recovery since then has been pretty significant. And even in today's trading on Friday, July the 18th, it looks to be pretty positive. I do see a long upper tail on that candlestick, so there may be a little bit of indecision here as we're moving into the earnings on the 22nd. I do see positive RSI. It's getting pretty close to the overbought condition at a level of 70. It's currently sitting at 69.54. I do see positive PPO, and we have had a crossover indicating momentum is improving. And we've had, after a very flat accumulation line for several months at the end of last year and the beginning of this year, we have seen a pretty steady increase in accumulation since about the beginning of March. Turning our attention to the 5-year weekly chart, we can see that RTX has had very strong momentum in its long-term averages. So it's been trading above its long-term averages since about early March. It's been trading above its midterm averages since about the end of November or so, with the exception of early 2025 did it trade down below its medium-term averages, and since that time it has been trading positive or ahead of those midterm averages. And the short-term averages are also positive at the moment. So RTX is showing positive momentum in the short term, the medium term, and the long term moving averages. In the previous quarter, AT&T reported revenue of $30.63 billion, beating revenue estimates by $264.01 million. AT&T reported earnings of 51 cents per share, in line with estimates. For this quarter, the revenue estimate is $30.48 billion, with earnings per share of 53 cents. Over the last 90 days, 3 analysts raised estimates and 9 analysts lowered estimates. AT&T meets or beats analysts 1 year forward estimates 100% of the time. AT&T is showing negative relative strength going into the earnings. The options market is pricing an implied move of plus or minus 5.1%. The AT&T 1-year daily chart shows that AT&T has climbed about 40% over the past year. We are seeing a bit of weakness as we move into the earnings with declining 5-day moving average. It's trading below its 20-day and 50-day moving averages, but still well above the 200-day. For relative strength, it is trading in the negative portion of the RSI at 39.55, and the PPO is also showing negative momentum at the moment. The accumulation over the past year has been pretty steady, flattening out here a little bit over the last couple of months. So overall, T is showing negative performance as we move into earnings. In the previous quarter, Alphabet reported revenue of $90.23 billion, beating revenue estimates by $1.08 billion. Alphabet reported earnings of $2.81 per share, beating estimates by 80 cents per share. For this quarter, the revenue estimate is $93.92 billion, with earnings of $2.18 per share. Over the last 90 days, 21 analysts raised estimates and 15 analysts lowered estimates. Alphabet meets or beats analysts' 1-year forward estimates 82% of the time. Alphabet is showing positive relative strength going into the earnings. The options market is pricing an implied move of plus or minus 6.4%. Google is trading just slightly higher than it was a year ago. It did climb to a peak in early February of around $208 per share, then started losing price up until the tariff announcements, and since then it's been showing pretty steady increases in price. Google is trading above its 20-day moving average, the 200-day moving average, and the 50-day. The 50-day is underperforming the 200-day, but looks to be potentially crossing over here in the next couple of weeks. RSI is positive, currently sitting at 66. The PPO is positive, with the short term trading above the longer term average. The accumulation has been pretty choppy over the last year, but we did see quite an increase towards about the third week of June up until this current point. Overall, Alphabet is showing positive relative strength and positive momentum as it moves into earnings. In the previous quarter, CNC reported revenue of $46.62 billion, beating revenue estimates by $3.37 billion. Centene reported earnings of $2.90 per share, beating estimates by 38 cents. For this quarter, the revenue estimate is $44.38 billion, with earnings of 38 cents per share. Over the last 90 days, no analysts raised estimates and 9 analysts lowered estimates. CNC meets or beats analysts' 1-year forward estimates 100% of the time. CNC is showing negative relative strength going into the earnings. The options market is pricing an implied move of plus or minus 8.7%. There is not anything good to find when looking at the Centene price chart. Centene is the worst performing stock in the S&P 500 for the year. The price fell 11% this week following a 38% drop that it had already suffered earlier in the month. However, Centene is not the only healthcare provider suffering this pain. This is an industry-wide story for them. Elevance Health, United Health, Molina Healthcare are all struggling through higher healthcare costs at the moment. The price drop earlier this month followed Centene pulling guidance for the year. A similar move by United Healthcare preceded this one. Centene is down over 65% from the September 2024 high, closing on Friday at $27.95. The main question for investors at this point is whether the healthcare providers can return to the same levels of profitability they have enjoyed in the past. The earnings report and conference call will be crucial for Centene this quarter. Well, that wraps up the review of company earnings for my portfolio holdings. If you find this video helpful, I request that you subscribe to the channel for alerts on future videos. I would also appreciate a like on the channel to help support the channel. Once again, thank you for stopping by today. I wish you a great day and remember to trade well. Thank you.